Morning, everyone. Am I audible? Okay, let's begin with the session, everyone. Today we are talking about private equity. Further, module D is going on. So let's move further regarding the same module. Module D, this is unit number 3 of the module D. In terms of the entire syllabus, we have got overall 25 chapters. So let's continue further, everyone. Okay. We were doing private equity, angel funds, and venture capital. चलिए. The topic is this. What is the primary authority of the private equity, everyone? I believe we did a similar question in the previous class as well. Right? What is the particular portion? Very good, Mr. Ahmad sir. It is correct. It is SEBI. SEBI, Securities Exchange Board of India, is responsible for this. Good morning. Now, let's see. This SEBI. Acha, okay. I think I will be switching off to the next slide. This is the previous questions itself. Let me just open up the new one. Acha, everyone, when we talk about SEBI, does RBI has any role in this, or only SEBI has a role? When we talk about Securities and Exchange Board of India, it takes care of all these things. It doesn't take care of anything else, right? We talk about SEBI, Securities and Exchange Board of India, whenever we are arranging funds for the organization. This is not something in the hands of RBI. RBI can put limitations when it comes to any kind of receiving further. You know? Just a moment. Let's switch it on and continue further. Everybody, the marathon which was held on, I think, a day before yesterday, please review the marathon properly and let me know. I think we'll be having another session soon. So till that time, please revise all the mini marathons. Okay, there it is. Right. These are the new questions, everyone. Look at the first question. Okay. What is the purpose of non-disclosure agreement in private equity? Non-disclosure means if one organization is taking over another, or private equity, whatever portion they have taken, that has to be very that has to be something which is to be kept in the organization at a very limited portion. है ना? What is the purpose of non-disclosure agreement, NDA, in the private equity investment? To disclose confidential information, or they are saying to solicit the clients, or to prevent the unauthorized use of confidential information, or to share the financial projections. Basically, now they don't want anybody to know about this. The particular organizations, till the time their agreements are not complete, they don't want anybody to know about it. So what is the purpose of non-disclosure agreement, or NDA, in the private equity investment process? In this case, the purpose of NDA is basically to prevent unauthorized use of the confidential information. In this case, the correct answer is to prevent the unauthorized use of confidential information. The second point, which document provides a detailed overview of the investment opportunity in the private equity deal without revealing the name of the vendor? Confidential information memorandum or valuation report or non-disclosure agreement or investment teaser. What would be the answer, everyone? Which document provides a detailed overview? Okay, overview of the investment opportunity. If you look at the investment opportunity, everyone, the private equity, without revealing the, if we do not want to reveal the name of the vendor, this is also the point that we have to take care now. Okay, okay. Now let's look at the answer as well. This is without revealing the name of the vendor. It is investment teaser. Okay, non-disclosure agreement is not to tell about the particular portion of their uh, the agreement and all. When we talk about the investment teaser, this is just a way of discussing about the portion of the investment opportunity, what exactly it is, you know. So we are going to talk about the investment opportunity that we are getting. Oh, am I audible clearly? I was. Am I audible clearly, everyone? Okay, I think I am. When we talk about investment teaser basically is an overview. Okay, it is something which is providing the information further. Now let's move on. Then comes the private equity investment in India are often made of privately held businesses that are not listed on any stock exchange. Private equity invest transactions involving private equity company are recommended due to the availability of high quality assets. What do you mean by the private equity there, everyone, and the reasons for the same? Private equity investments are often made for privately held businesses that are not listed on. Yes, obviously, now when we talk about the private equity, now people take it when they do not want to go for public. Okay, they don't want public to have their share. And then private equity transactions involving the publicly traded company are recommended due to availability. The private equity is basically traded when the company do not want anybody else to be a part of it. They want, due to the availability of high quality assets, this is basically when we want only set of people to be involved in it. So in this case, the correct answer is A only. Thank you so much, Aman sir. It is A. The assertion and reasoning both are correct. Okay? These kind of questions would be there in the examination, everyone. Okay? These kind of questions are asked in the examination. Chale. Now comes the next point. This point says, how do venture capitalists typically compensate for high risk? How do venture capitalists typically compensate for high risk involved in new funding business? When they are giving funds to anybody who is who's very new to the business, and we are taking a risk by giving them money, what are we going to do? Providing low interest loans, demanding the share of the company in exchange for financial backing, or offering government grants, or when we are exclusively investing in companies with prior expertise, providing low interest loans, demanding a share in the company. I think the best way is, if you have seen Shark Tank India, they are like, if you want a loan, we want 5 to 7% of holding, 10% holding. Then this case, they are making sure that if this company works well, then why don't we take a part of this organization too? You know, that's the coolest thing to do. That is, if you see there's a new venture coming up and we are taking a risk, Why to give them loan? Take up their ownership as well. That is how these organizations later on take over the entire new organization when they see it is growing further. So the answer would be B. They demand a share in the new equity share. They want a part of their organization, because when you have a part of this organization, you have every scope to grow further, and the scope cannot be taken away from you. This is the power of this era, that whenever you want to grow further, then this can be done by the organization itself, that they will demand ki, "Nahi, nahi, we want equity shareholding as well." If you have equity shareholding, you will never have a problem, right? Done, everyone? Chaliye. Then moving on to the next point. The next point says, which of the following statements are false? Indicate the correct uh, option there. Share capital issued by the company for the first time is known as venture capital. All venture capital funds are promoted by the government. In addition to capital, venture capitalists provide managerial and technical support as well. Benefits from venture capital financing can be realized in long term only. When we talk about the venture capital, then which of the following statements are false? See, the point is, indicate the correct one. Acha, in this case, when we talk about we have to find out the correct one only, because we cannot find all the ones which are wrong. Na? Just a moment. I think let me just make it more visible to you. In terms of this part only, one is correct. Okay? Indicate the correct code. In this case, share capital issued by the company for the first time is venture capital. This is not true. In addition to capital, venture capitalists provide managerial and technical support. Vesena C is correct, everyone. If I have to go for the correct one now, and this is also correct, benefits from the venture capital financing can be realized only in longer run. Yes, it can be done only in the longer run, even when the companies are share capital issued by a company for the first time. If the company is trying to grow further itself, then they can issue shares to the venture capitalist first. This can also be true. I believe there is only one thing that is wrong. All venture capital funds are promoted by the government. There is nothing of that sort. Not only the government is working, venture capitalists existed in the era of even the time when the independence wasn't there. So this thing has been a trouble in this case at all. Okay, chaliye, let's continue further. Everybody, if you like this particular session, please share it among your peers, and don't forget to like the session as well. Whatever topics that I'm covering today is a part of module D, so please go ahead and share it. This is something that motivates us as well, because every single day we are making more and more content from the IIBF book itself. The content is not prepared from anybody, anything else, but it's just from the book itself. Okay? Okay, now let's look at it, everyone. Why do venture capitalists think that entrepreneurs should work with them? Why do they think that the entrepreneurs should work with them, everyone? Why do venture capitalists think that entrepreneurs should work with them? Due to financial expertise, value in strategy and acquisition, quick funding, or network expansion. That is, why do venture capitalists think that entrepreneurs should work with them? The entrepreneurs should work with them because of value in strategy and acquisition. Basically, people look at venture capitalists due to two things. One thing is true, that we get finances from them. But other than finances, one of the core areas of these people, venture capitalists, angel funds, is basically that these people provide highly valuable strategy and execution of the processes, which is not when you are new to the market, you are not able to find it out. It's not easy to come up with these ideas on your own. So in this case, the correct answer is B, value in strategy and execution. Acha, what could signal that a venture capital firm is facing challenges or fundraising? Regular investment in startups, lack of engagement in portfolio companies, recent completion of funding round, or no new startup investment for over 6 months. What could be the signal that the venture capital firm is facing challenges? When the company is facing challenges, now the signals are definitely there, and they are bound to be known to the public. For example, regular investments in startups, when they are making money and they're investing in startups, means everything is fine. Then lack of engagement with portfolio companies. If they are not involved in portfolio companies, I don't think this can be a major point. Recent completion of a funding round, they have just completed funding round. That means they had money. Only then they could give money to others. And there is no new startup investments over 6 months. If they are not investing in anything over the period of next 6 months, then it is six. It is D only, everyone. Okay, no new startup is investments of for over 6 months. Next point. When are liquidity events such as IPO or sale or to a public company likely to occur in private investments? Shortly after the initial investment, after a considerable amount of time, quarterly, or at the discretion of general partners. When are liquidity events such as IPO? IPO is basically when you are making fundraising your funds or you are selling the public company, likely to occur in a private equity investment. In terms of a private equity investment, when can it happen, everyone? वैसे तो this there is no specific time on a genuine note. When a liquidity event such as IPO likely to occur in private equity. In terms of private equity, I would say once they get a good amount of money from the private equity people already. So after a considerable period of time, when you are in need of funds, the funds is already arranged. So this will not happen very soon. Okay? This will not happen very soon. Go ahead and please participate in the answer, everyone. What can private equity funds can be used in terms of business development? Where can we use it, everyone? Private equity, trading public stock, financing public corporations, reinforcing balance sheets, or delisting private stock. What can private equity funds be used for? पता है, funds are required for the company. Maybe they would have been going for IPO earlier. It puts a lot of pressure on them because they have taken loan from the public. Public is putting money into them. So demand and supply, they are stuck with that particular thing. They are looking at the stock market fluctuations. It becomes difficult. So trading in stock exchange is what they are running from when they opt for public equity, private equity. So this is gone. Financing public corporations. You are there to fund yourself first. If I am looking at the private equity funds now, I want money. So in this case, that is why I'm keeping this one out as well. Delisting the private stock, you are these are already out of the public listing, so this is not the point even. Basically, when you are putting the private equity into the business development, you are trying to save the company by finances from certain people with whom it's like you have a buddy now who can help you out in your work. Rather than taking money from unknown, you are taking the money from known. So you try to have a particular business relationship there. So it is reinforcing the balance sheets. Next question, everyone. How is the price of the company's shares determined in private equity transaction? Market forces, negotiation between buyer and seller, publicly traded company comparison, or regulatory frameworks. What would be the answer in this case? How is the price of the company's shares determined in private equity transactions? Oh, sorry. The answer is negotiation between buyer and seller. How is the price of the company shares determined? Private equity. Two people are sitting. There is a buyer and a seller, right? So these are the only two people who are involved. In terms of shares and all, we will find a lot of people being involved. Private equity is between two parties. So these are kind of case study kind of questions which I try to create for you. So private equity distinguishes itself from by deciding shareholder right individually through negotiations. The point is clear, right? This is what in the IBA book itself. This is a kind of question that they can ask, taking a particular paragraph from the book and asking you questions from it. Sorry, this point says that when we talk about the negotiations, how does this approach impact the governance structure compared to publicly traded companies with the standardized governance framework? Introduction of standardized governance structures, greater flexibility in governance dynamics, alignment with public market governance norms, or reduction in decision making variations. What would be the answer in this case? The private equity distinguishes. How does this approach impact the governance structure? Everybody, we are having a word with someone else, है ना? And at the same time, we are having a word to a public traded company. A company which gets money from public is deciding to look forward towards a private equity area with standardized governance frameworks, introduction of standardized governance structures, greater flexibility, alignment with public, or reduction in decision making variations. Uh, okay. We look at this question, private equity engages. Acha. In this case, when you are looking forward towards governance frameworks, na, you understand that the governance dynamics are changing, isn't it? You understand the fact that earlier there were things in terms of public, there were standardized. In terms of SEBI dealings, you will see there are standardized agreements. In this case, they are also looking forward towards governance structure. This is because they want to add greater flexibility in the governance dynamics. Next question, everyone. The private equity firm engages in distressed funding. Matlab when the company is almost dying, is very stressed, then they provide funding to them to invest in struggling businesses with underperforming assets. Matlab the company is doomed right now. It is slowly and steadily dying. What distinguishes distressed funding from other forms of private equity financing? Focus on high profit assets, investment in financially stable businesses, investment of changes to improve management, or exclusive consideration of tangible assets. When we talk about the private equity, now private equity basically tries to improve the management of this organization. They are literally helping these organizations to improve their management of funds, because now sometimes it's not about the problem of the funding. Everybody gets funding at one point of time, but the point is, are you using that 100 rupees, 200 rupees, 1 cr, 2 cr, 200 cr in a proper manner or not? That is the consideration. Okay, chaliye, that's it for the day, everyone. But before I end my session, let's have a look at our website. The perfect time is going on, everyone. This is the time when you should look forward to our classes. As you can see, the double validity is going on. Anybody who's new to our batches and is preparing for May 2024, you can look forward to what CIB Mahapack and bank promotion Mahapack is also available. Now, what you can do is you can take up our Parpack batches as well. Revision for ABM, BFM, ABFM, and BRBL. Okay, ABM is already done, so BFM, ABFM, and BRBL. You are still left with three papers. You can take up our courses. What you can do is, if you take up the course of revision, you just have to use the code Y541 and you can apply it, and you will get it for 81% discount, and it would be less than 2,999 if you do it through our app. If you get through it our app now, then it would be 81% of discount which is available for you. So if you're planning to prepare through us, then you should do it at this point of time itself, because the maximum discount is available. right? So this is one of the best offers which is available at this point of time. So go ahead and check it out on our website, on our app for further details, right? So let's meet up everyone.